call me, I'll be happy to answer the question to help you out. In fact, I can always, share my screen with you through TeamViewer or Zoom, or I can actually, try to navigate you if that's not the preference that you have. I can try to navigate you actually to do so. So you can actually call me at 904-425-1238, and I'll help you out if you need to, just to give you a couple of hints how to do this. Let's say that you want to set up actually an account. Again, I'm going to remind you, just for a group of you that you weren't actually in a conference last week. I'm just going to show you this very quick, that you're going to set up and say, for example, this is going to be consulting income. Or any type of income. You can call it a construction, or you can say legal fee income, and you can write a description in regards to it, which will be reflecting your income statement. Now I'm going to actually go ahead and move, besides the chart of accounts, I'm going to move actually to the list. Again, the rule is pretty much the same, just the buttons are different. So this is going to be pretty much refreshing for all of you what we have discussed last time. I'm trying to present you that this is no different than what you would do in a desktop. The benefit of the QuickBooks Online, once again, is relevant that you do not have to create any sort of the backup. You can access it from anywhere. In fact, any computer that you have, any computer has access to the internet. It's completely irrelevant whether you use the Mac or you use, PC. It doesn't really matter. As long as you have a browser and as long as you have an internet, you can access the file. But of course, it comes with a price, because this could cost you anywhere, between $50 to $70 for full features with a QuickBooks Online. And then of course, you can have multiple people at the same time, multiple users at the same time to use the same file. That's also contingent actually to the license, and you may want to check that with Intuit, depending actually how did you subscribe for the product. So now the list actually stands, they use the same terminology. The list actually is relevant, to your products, okay? So as an example, if you remember, I was explaining to you the chart of accounts. It's pretty much, stands out there that will be sitting on your income statement. And let's say that's going to be a legal fee or construction income, as I was setting this up. But the type of the services that you're going to provide is irrelevant to the list. So as an example, you might be a general contractor who actually provides, roofing services as an example, but yet actually, which means that you're also a roofing contractor besides being a general contractor. So now you're going to say, okay, so I wanted to trace actually my roofing income, and I wanted to trace actually my, my home addition income, or I wanted to trace actually commercial and residential income as an example. That's really, you're going to create a list of services that would be pretty much product and services. That's what really stands under the list. So you can actually get to the chart of accounts, and you can get actually to the product and services. So as an example, you're gonna actually set up to say, it's the same thing. I went actually a little bit too quick on this. So once again, you're gonna go actually to list, you're gonna go to the all list. And when you go to the all list, you're gonna have access again to access the chart of accounts or to go to the product and services. So at this point of time, we talk about the products and services that you provide. So you're going to click on the product and services that they're right pretty much in here. And then you're going to add a product or services that you're going to be pretty much involved with. So obviously, this is going to be relevant to the services because I would not recommend I would not recommend actually QuickBooks Online or any sort of the QuickBooks to be used, for businesses to kind of run inventory through the QuickBooks, because I have experienced so many issues as far as trying to run an inventory. So many of you that have businesses such as a restaurant, you probably use Clover. Many of you actually that have, beauty shop may use actually different storefront programs that they do control the inventory. So therefore, all of this is excellent, but at the same time, when it comes to the inventory, I have experienced some hiccups that I would need to attach actually, or I would need to go to the marketplace of the QuickBooks and try to buy additional app to help me out to properly actually account for the inventory. But let's stay focused in here. In a case actually that we're going to be providing, non-inventory, products, and that we're going to be providing actually services. So let's say that we're going to be providing a services in this particular case. So as far as the services, you're also going to name the service however you want it. You can say for attorneys, you're going to say actually, DUI client as an example, or you're going to say family law, depending actually, what is it exactly that you do and exactly that you provide, because you can actually itemize each service. You can itemize it, and you can itemize it actually under the main group of the services. So let's say the main group of the services going to be relevant to legal services. That's going to be your category of services that you provide. But the sub-service is actually going to be, DUI representation, family law representation, or any type of the services in a construction that could be actually roofing, could be additions, could be, commercial, residential, or whatever you wanted to really trace, you do have opportunity for it. Now, keep in mind, all of that will get grouped under sales or whatever income account you have named, because if you remember in the prior screen, when we had a chart of accounts, I have shown to you how can you go out there and create account of your choice that will be pretty much sitting actually on your income statement. And remember, at any point of time, if you do have any questions, you can just ask me, and I'm going to basically stop and I'll try to answer the question, because that will be easier as we're already on the topic. So far, does anyone have any questions?
I don't see any coming through, but don't forget you can ask these throughout if you need to. Oh,
see actually notification that Angel Wilds have raised a hand.
I do see that. Hold on just a second, Angel. Let me allow you to talk.
My question is this: I work in a nonprofit. So what I want to do is I'm going to have a grant, and I need to compartmentalize each thing, like I do advocacy services. So I have my organic customers, which will be under one program, and then I have a grant that I have to keep track of as another program. How would I do that? I was looking at your legal services, and you said name the service, and you said DUI client or family law. Then you mentioned the category that you would put legal service, and the subcategory would be DUI. Is that all? Can you explain that in a way that for consulting or for advocacy services, organic versus your different grants that you may have?
So here's actually a question that I have for you, because remember, in your industry, you have a restricted and unrestricted funds. So what you're referring to, is it restricted or unrestricted, this particular grant that you are describing?
Well, it is restricted in the sense that it is in Duval County. I'm limited to persons in Duval County. So that part is restrictive.
So in example, okay, like if I can just kind of clarify my question. So in example, let's say you would get $1,000, $10,000 as in grant, okay? And then the grant actually will be used, once we provide a service. Is that how it goes? Or the grant actually just is given to you and said, go ahead and use it?
Yes, actually there's two. One is restricted in the sense that I get paid back or reimbursed, and the other one is just given to us.
Okay, so as an example, you know, you're gonna create in a category, okay? You're gonna create the group that you're trying to actually to basically trace. So as an example, you're gonna call the group the name that you wish, and that's gonna be your income. And then your subcategory of that particular group going to be specific type of services that you wanted to provide. Now, that's going to be between the group and a category. But now right in here on chart of accounts, you have to actually do the same thing, okay? Because remember, in here, you're going to say, for example, what's the name of the services that you're going to be providing?
Well, it is Advocacy Services, but we have separate services on Educational Advocacy Services.
So let's say,
but there is going, okay.
So educational going to be the one, right? And then this is going to be, all the group will be called advocacy. It will be just a second, just 1 second, my mouse doesn't work. So advocacy services, right? So that's going to be grouped, yes, and be one of the services as an example, okay? Now, what you need to do, I did not save it, just 1 second.
Well, I wanted to break that down even further. I don't want to take up the class, but I want to break that down even further.
You really can, because you can create a sub of the sub. But what I'm trying to tell you is, okay, this is the catchy part. I just want you to know that this is a catchy part, because remember, on your income statement, because that's going to be your income summary, when you go to the report, that's where you really wanted to see those just for the easy access. So in here, you're going to create, as an example, you're going to create actually you're going to create an account that is called Advocacy Services, right?
Okay.
Same as you actually doing, same as what you did what you did actually within the product and the services, okay? So now this is going to be the group that would be relevant and shown, for example, that on the income side, you had an income of $10,000 all over pertaining to the advocacy, okay? But the moment actually that you, if you decide even to go to even further in the detail, you're gonna create a sub-account in here as well, which is actually, this is how you do it. So you're gonna say sub-account of advocacy. So in example, this time actually going to be education, because you have received the funds for $10,000 in example, you know, for advocacy services, but you wanted to really allocate, you know, of those 10,000, you wanted to go ahead and itemize and allocate how much did you receive actually for each section of those, if I should say it that way. Would that make sense?
Yes,
Is that
sir.
what you're trying to achieve?
Yes, sir.
Remember, there's also one more thing for your industry. You need to, you likely gonna have to do this because, you know, of the board of trustees that you have out there, you're gonna have to basically create accounts, the expense account that they're associated with this activity. Would that be something that you do expect to create?
Yes, and that's another area that's why I asked if you guys did nonprofit as well.
Yeah, well, we really are not specialized in the nonprofit. I mean, of course, you know, I've done so many nonprofits, but majority of our business, you know, is really relevant to the profit, corporations actually for profit, businesses for profit. But if you do need a help, you know, in this aspect, you know, you can reach back to us, or if you're working with accountant, you know, tax accountant, you know, I'm sure that he can assist you, but if not, you can reach back to us. You know, I can definitely try to help you as much as I can.
Okay, great. Thank you.
All right, sounds good. So now we're just going to go ahead and move to the part as we have. Are there any other questions before we move forward? So now what we're going to do is, as we have defined the service, remember the service actually that we provide, you know, it could be just like we were talking, about a non-government organization, or everything actually goes, what defines our income, what type of services defines our income. So in this particular case, we were providing advocacy services, with a non-government organization, but yet we could have actually provided this as a consulting firm, because we could have been attorneys, that we provide actually some sort of educational services, or we provide actually some sort of legal services, as far as writing the wills and, whatnot actually out there, basically relevant to the legal industry, and same actually relevant to any other industry. The main point that I would like to conclude this part is define your service. If you wanted to itemize your service, create a group, which in this case actually would be, residential and commercial, depending actually what you basically do, whether you want to say additions, or you wanted to say that you're doing a leasehold improvement, or whatever type of services you do. And now on an income side, you can really map this so you can automatically see when you run your income statement, you can see how much money is coming, in example given, from residential sector, and how much money is coming from commercial sector, if that would basically would be a detail that you really care. And yet you can actually create a sub-accounts under the main account, under the main chart of accounts, if you want to go further in the detail, just like example that we had in regards to non-government organization. Now, just so you know, you can also, if you remember, I was basically showing you so proudly like I made it, but basically Intuit did it. And I was so proud because I could not believe that for such affordable price for a business owner, that you can have all those features, how perfect product in my mind they have created. So in example, you can use actually the feature of attachment, which at the same time, it gives you opportunity that you can attach actually, the receipt to the particular transaction that is listed in here. So whatever that transaction would be. So an example, you could buy a computer, or you could buy, something that carries the warranty, or in fact, actually, you do need to keep your receipts because of possible audit that you can experience from the tax government agency in regards after you file the taxes. The next one actually that I will show you is, you do have something, what they call tools in here. In regards to tools, you can import, quite a few information actually in here. I forgot to mention, and I did say this in a prior session, that if you use desktop and at any time you kind of decide to basically go online, which would be always the first option, I would suggest go with the desktop, get yourself a feeling, and then decide, whether you wanted to have this to be set online, or you want to keep it as a desktop. Again, advantage is desktop does not have a recurring expense, where online actually it really does. Desktop is a limited, to number of people that can access the file, because the file obviously is stored likely, on your desktop, as supposed to be actually having, file to be stored in the cloud, where everyone actually can get access to it. But of course, that comes, with a price. So one of the coolest features, that I have seen in a QuickBooks Online is that you can import, for example, your bank transactions. So QuickBooks Online, as an example, lets you download, once you create, I'm going to exit this screen and just show you this very quick. QuickBooks actually Online lets you to go ahead and update, as an example, update all your transactions just on a one click, as you have linked everything with your banks and your credit cards, right? And in here, it's going to show you how many transactions you have listed. So as an example, in here, the bank actually says, that some of the transactions actually are coming from Amazon, okay? So now it's gonna say you have to actually name it. So you're gonna actually put Amazon in here, and depending what type of the business is this, you may wanna call it office supplies, which likely could be the case, or you can call it actually something different depending on the industry that you're in. Same thing for the Target and a Comcast, you know, that in this particular case, the Comcast likely gonna be internet or telephone. That's how you're really gonna code it. But the part of the import that I wanna kind of share with you is that if your data, in example, today is December, and let's say you started your business back in January of this year, and now you're just trying to get your books, you know, kind of clear before the end of the year as you're trying to pass those to your, you know, tax preparer person. So now what's going to happen is you're going to run into a problem because you won't be able to download more than 90 days of history on your accounts, okay? But the cool feature actually that QuickBooks Online has versus desktop is that in an online feature, you can download your data in Microsoft Excel to CSV file. And you can download, an example, everything from January all the way through September, if that would be pretty much the cutoff period or something that you basically are looking for. So as an example, you're gonna export all of those files, and then what's gonna happen in here is you're gonna say upload from a file. So as you click in here, upload from a file, you're gonna say, okay, I'm going to actually get those informations from the bank, which again, remember I was telling you, you're gonna get the CSV file because, you know, every bank, I don't even know of a single bank that does not have a feature you know, of exporting data to the CSV file. So you're gonna select, you know, desired date range from January 1, for example, until, you know, September 30th as an example, because likely, you know, 90 days. So that would pretty much until August actually. So you're going to actually go ahead and export those transactions, and it's going to pretty much give you an opportunity to save the file on any location of your device that you use. So let's assume you're going to save that somewhere on a desktop, just as an example. So as you save this section on a desktop, you're going to create, you're going to actually select the file. And as you do select the file, then you're going to actually click next, which I do not have a file for that reason, but I'm just explaining you the steps. And then you're going to need to map the fields of Excel to the fields of the QuickBooks. If you're doing this for the first time, my advice to you would be to call tech support, because the tech support for a QuickBooks Online is already included. You may gonna experience longer wait time, or you know, if you feel even more comfortable, you can go to the YouTube and then you can try to figure this out yourself. But the QuickBooks Online actually provides the free tech support. It's just not as expedited, you know, as we would probably wish. And remember, those guys are not an accountants; they are software specialists. So you cannot rely on any sort of answer for them to give you advice. How should you create a chart of accounts and what you should do? They're out there, you know, to explain to you and say, okay, what is the issue that you have? And you're gonna say, well, my issue is I cannot import the data, okay? And they're gonna say, sure, don't worry about it. We're gonna show you how to do it. Go to your bank, do export, you know, in a data range that you prefer, save it in a CSV file, and then go to the process that will explain it to you. But they cannot advise you, you know, which chart of accounts you should use for a certain transaction, because for something like that, you should consult, you know, your accountant that you're working with or tax preparer that you're working with. Did you have any questions in regards to the import of the bank transactions that I can explain to you? Perfect. So again, that was actually the manual import. In this particular case, the bank account is already connected to sample file that I'm showing it to you. And then in event, sometimes it's going to show in here, it's a very, very, very common. It's going to say error, error, error. We cannot actually update anything. The reason being why you cannot update anything is because likely you had changed the password on a bank. So the way actually how you're going to correct that, you're going to edit account info once again. So you're going to click actually, excuse me, you're going to click actually on it, and you're going to say, I'm going to edit account info, and then you're going to end, I'm sorry about that, not account info. Just give me 1 second. Here you go. Edit sign-in info. And that's where you're going to enter your username and password. The prior one, that I was showing it to you would be pretty much edit account info, which is if you wanted to rename account. But edit sign-in info, that's where you're going to enter your username and password so you can actually relink everything. And once you enter a new username and password, you're just going to click update and everything actually going to get updated accordingly, if that makes sense. Now, another thing actually that I want to emphasize in here is that prior to you converting actually desktop to online, any conversion you're trying to do from a desktop to the online, it means that your online version, you cannot work simultaneously in both versions. Because I've experienced this as a problem before, from my clients. They would say, well, we did an update, we converted the desktop version to the online version, but then, we were kind of working for a minute in the online version, and now we lost all data. Well, technically, as you're doing a conversion, I would encourage you to do this with a QuickBooks Online support, because they're going to warn you and they're going to say, hey, listen, if you have any data on your QuickBooks Online, it will be replaced with everything that you're bringing in. It won't merge, it will likely replace it. So you be careful if you're trying to convert desktop to online, especially if you were simultaneously working on both files and then now you're trying to merge them in one. Then at the same time, another important part actually in here is reconciliation. So pretty much reconciliation actually really stands for, to balance your checkbook. Balance your checkbook, as far as what you have spent, versus actually what has been cleared with the bank. And I will show you actually how to do that. So as an example, you're gonna go ahead and match the books to the bank records, right? And then you're just going to go ahead, and if you're confused how to do that, there's a video of about 7-8 minutes that you can run and see actually how to do that. This could be confusing, especially if your beginning balance is not correct. This could be also confusing if by mistake you have voided a transaction that was already cleared. And at that point of time, you would have a more luck to talk to your accountant then talk actually to the QuickBooks support, because if you have deleted the relevant transaction, QuickBooks support will be able to create a transaction to kind of help you out to balance it, but not necessarily actually to map it and say, where is it belonging? So you may want to contact a tax professional that you're working with and say, hey, I messed it up. Can you just log in and help me out? So if you do decide, actually to do reconciliation yourself, in here, you're going to have a list of the accounts that you can reconcile, right? So as an example, you can select any of those accounts and say, okay, I'm going to go ahead and reconcile my business checking account. My advice to you is to call business checking account by, abbreviation for your bank, and to call it with the last 4 digits of that particular bank account. This is a sample file, just so you know. So I did not name it that way, but in the prior chapter last week, that's what I was pretty much explaining it to you. So as an example, we're assuming that this account was just open, and this is gonna be our first reconciliation ever. So as we have opened up a bank account sometimes last month, which is in November, now, obviously, by now, we do have a bank statement that is available, right? And the bank statement gonna say that our beginning balance is a 0. Our ending balance, let's assume, is a $500. And the ending date, which means the closing day of a period, the period actually of the statement going to be an example for most of the banks that going to be the end of the month, which is the 30th. So you're going to actually go ahead and start reconciliation, right? And on this reconciliation, you're going to have to select, okay? You're going to have to select everything that is irrelevant to your, actually to your particular bank statement. So as an example, you're going to have all your deposits and all your withdrawals, debits, and payments. So you do section at the time. So just to create yourself accountable zone, don't go actually immediately for all, just select one, because the statement is divided between all credits and then debits and likely checks. As an example, if we are talking of the bank statement layout with the Bank of America, or if we're talking with the layout of Chase, if we're talking with the layout of the ViStar actually got everything combined, got a debits and credits, left and right. The checks actually are not in a different section, they're below one another. At the end of the ViStar statement, you do have a list of the checks as well, but it will be just easier for you to filter which section you're reconciling first. So you're gonna go ahead and select and say, okay, I'm having actually deposit this month only of 500, I did not do anything, as an example. And therefore, since that's the case, now it's gonna say, now you have reconciled and you have to hit finish now. But at the same time, you're gonna say, well, what about those rest of the transactions? Well, that means the rest of the transactions have not been cleared. Remember, this is a sample file that I'm showing it to you, but I'm just trying to show you as real as possible what would happen in your particular case. Now, did any of you have any questions related to reconciliation that can help them out? Perfect. So we're gonna go ahead and move to budgeting and audit log. So as an example, audit log actually pretty much gonna show you who, when, and what did. It's kind of a little spy, pretty much stands for itself. It's gonna tell you who had logged in, when did they log in, what transaction did they touch, what changes did they made, or if they have deleted anything. And that's just really, really relevant in a case actually that you do have a multiple users within a QuickBooks file. Then at the same time, you can create a budgeting feature. And this is also, something that is a very recommendable, in accounting industry, that every accountant gonna tell you, hey, did you budget for it? Did you budget? Did you create yourself a forecast? Did you see, could you support additional employee? Did you see, could you support actually, your expense, purchase of equipment? What is your cash flow in that regards? So many accountants gonna advise you to create some sort of forecast, and this is an excellent time for you all to do, to say, how is it that I see my 2021? How much money do I expect in my pipeline as far as the income? And what are my expenses per se going to be? And at that point, you're gonna see if this actually gonna create a profitable year for you. Now, the most important thing actually on a budgeting feature is that you can run actual versus planned. So an example, you could have actually say that you're planning each month to create the $10,000 of revenue for your respectful business, and you can itemize all your expenses. And then at the same time, you can run a report from the report section that's gonna give you an option to run actual, versus planned versus actually forecasted. And you can see how well did you do in a particular time frame that you're going to select. Now, at the same time, I'm going to move actually to the tools, and you're going to have those tools over here. They're called accountant tools. Like I said, my version is accountant version. So therefore, I'm not really quite sure from the top of my head how this is going to be called in your case, but yet actually it's going to be something along the line that you can access, quick links that also you can actually access them. Many of those features you can access actually on your left side of the screen. So as you can see, you can expand the screen and you can hide actually your quick links that you have on your left. So on accounting tools, in a prior, in the last week, somebody was asking me, about the journal entries and how to use the journal entries. If I have to repeat again, how in practice you need to use a journal entry, which is pretty much, this is actually some sort of adjustments that you wanted to do on a quick, for example, as far as the depreciation expenses versus accumulated depreciation on your balance sheet. That's really when you want to use journal entry, but not necessarily that you want to start adjustments, between bunch of accounts, because that's not the way how it's supposed to be done. You should code them all properly or have somebody to help you out, because you can't just throw the number and say, oh, you know what, I'm thinking actually that I've spent, $5,000, of my personal money, for the fuel. It doesn't work like that, because remember, you're subject of the audit. So whatever you report on your financial statement and whatever tax preparer reports on your federal income tax, that's going to become subject of the audit. And you, sooner or later, if you're ever in an audit, you're going to need to justify your statements, your financial statement that is converted to your income tax. And at that time, you're going to have to provide itemized expenses relevant to any of respectable categories. We talk about the reconciliation. The report screen actually is something that I'm going to show you. It's also available, as you can see, on my left side of the screen. So I'm going to actually just show you. It's pretty much the same screen as a desktop version. So those are your standard. Those are your standard reports. In example, as far as what accounts receivable stands for. So accounts receivables actually stands for, for those of you that invoice the customers, that does not create a sales receipt. It means actually that, as a consultant or a construction guy, you basically create an invoice and you say, hey, you as a customer, you owe us actually $10,000 for the top of the service we have provided. At the same time, they may gonna pay you that in full, they may gonna pay you that in parts, but at the same time, at any point of time, you're going to understand how much money you have in receivables, how much money actually sitting in a pending status actually for you to receive for the services that you have provided. And that's going to be pretty much shown on your balance sheet as a line item. Now, as I was explaining to you last time, your balance sheet, as an example, going to show you your financial position at the bank. And then if you did have accounts receivable, if you did invoice any of your customers, it would actually show here a line item, and it would say that your customers owe you, for example, $50,000. And for those of you that have an inventory, it would show in here that your inventory, for example, is at $30,000. So now this figure is going to be 50 plus 30, it's going to be over $200,000. That's going to be what is considered part of your asset. Also, as in part of your asset, going to be shown as an example, that you do have so much in a fixed asset. Your fixed asset, as an example, going to be vehicle, going to be tools. It's going to be basically your building and whatnot. So all of that going to add to your total asset. So remember, I said there's over $200,000, including receivables in the inventory. But now if you add your vehicles, if you add your tools and whatnot, this number obviously going to be way higher than $200,000. Do you have any questions related to the asset list and understanding the asset list? Great. Now, on top of that, basically you're going to have a certain liabilities, okay? Your liabilities actually, they could be contingent to pretty much, following parts. You could have owed the money to your vendor. So in example, you could have a subcontractor, and a subcontractor actually have billed you, $2,000 actually to do the framing on somebody's house. And then his bill going to sit actually in here with an accounts payable. Obviously, it won't say, it's just going to say accounts payable. It won't say who is it that you owe the money, because for that, you're going to go out there and you're going to run the report of accounts payable, and I will show you how to do that. But it's just going to show you the summary figure of how much money actually is that you owe. Obviously, that would be a positive number, not a negative number, as this is a sample file, as I'm basically trying to show it to you as real as possible. Because remember, the last time I was using actually file from the scratch, to set it up and explain to you without any figures in it. And we went in and created the figures. I wanted to use this simple file to show you that you cannot have a minus on accounts payable. And if you do have a minus on accounts payable, that means that you likely may have paid a bill to somebody, but yet you did not actually process that, as in part of the bill that you have received from them. So it's almost like you pay that as an advance. It kind of shouldn't be that way, because that's not the way how everything pretty much works, because you pay the bill as you receive the bill. If you're gonna be paying somebody, as an advance, then you have to actually book it a little bit differently, but not necessarily, to say, hey, I'm paying advance and it's going to be with accounts payable. It won't work like that. Then the next bill, the next part on liability accounts, you're going to see actually all of the credit cards. So you can have a multiple credit cards as an example, and it's going to tell you that you're likely going to owe XYZ. Now remember, just because I ran the report as of November 30th, many credit cards really do not get closed, before the middle of the month. So yeah, sure, sometimes you're going to have a negative amount. It's going to look like that you do not owe the money. But that's again because I have put the stop on filtering the dates all the way through the 30th, as we know that most of the credit cards actually do finish in the middle of the month. So it's possible to have a negative amount or even a positive, but as long as you have reconciled your bank accounts, you should not be worried so much on this. Then for you guys that do run the payroll, you're going to have outstanding liability. Outstanding liability could happen because your payday technically or your payday for, your payday for your liability taxes, an example, is a December 1 instead of November 30th. So therefore, there will be some balance in here. Or as an example, for those of you that pay taxes on a quarterly basis, such as a Florida reemployment tax, and you do have a payroll feature within a QuickBooks Online, it's going to show you accumulated amount, accumulated balance as of today, which you're obviously going to pay sometimes in January. So you shouldn't be worried so much about it, as long as you have talked to the accountant and as long as you got this clarified. But I'm just explaining to you what it really means. Same thing, you're going to see the sales taxes, as your current liability that will be sitting out there. Obviously, taxes are collected, for month of November, but yet they are actually submitted to Florida Department of Revenue sometimes in December prior to the 20th. So therefore, you're going to see the balance as well. And then on the equity side, you're going to have owner's investment, which is pretty much, it would be owner's distribution, which is the money that owner would have taken, because really on equity side, would be paid in capital or investment or whatever you wanted to call. But many accountants are actually going to use the proper terminology. They're going to say it's a paid in capital that you basically have out there depending on the business entity. And then at the same time, your retained earnings. This is pretty much, what has been accumulated, as far as the profitability, net profit of your business year by year. That would be reflecting your retained earnings. And then at the same time, asset minus liability, it's going to give you basically your total equity of your business. Did you have any questions as far as the balance sheet? Now, don't feel bad because if you do this yourself, many times you're going to see that the balance sheet will not make a sense. My suggestion to you is, if because of anything, get with your accountant, every 3 months and just say, hey, can you help me out, to understand that I'm doing this correctly with my profit and loss. And also I wanted to really emphasize my balance sheet, because anytime you're trying to pitch anywhere, whether you, like, for example, if you're a non-government organization or even organization for profit, if you try to apply for anything, they're going to say to you, well, can we see your income statement and your balance sheet? Can we see your financial report? And many times, those financial reports would not make sense. That's why, I always recommend every 3 months, talk to your accountant, make sure that your income statement and balance sheet is correct. And if those two are correct, then you will see how well you do comparing to the budget that you may have established, within a QuickBooks or in your mind, thinking actually where the business is going. So I'm going to go back to the reports.
I see a question
Oh, you
in
do?
the chat. Is
Please.
payroll broken down into payroll, taxes, medical, or is it all in one category?
It's going to be all in one category in here, but you can run a payroll report that's going to tell you actually what your liability is. So as an example, this 375 could be consisted of state unemployment tax, could be consisted of Medicare, Social Security, federal unemployment. All of that could be under the payroll liability. If you want to get the detailed report, I'm not sure if I would have that module in here, but you're going to go out there and you're going to look actually for payroll reports. And I don't think actually I have, here we go, but I just got an employee contact list because I don't have a module in here. So you can actually run a report that it's going to show you payroll liability, and it's going to be showing broken down from where $3.95 is coming from. Does that make sense? Does that actually answer the question?
Yes.
Excellent. So now on a profit and loss, and remember, through your setting, if you remember, as I was explaining and using this non-government organization, not-for-profit organization, I was asked, hey, if we provide advocacy services, but, we provide actually, that's really a group of services that we provide, right? So, but we do have itemized services, such as educational and whatnot, and we would like to trace those, individual, because I wanted to go into detail. You can actually also, through the setting, just so you know, as you set up your payroll chart of accounts, they're all set up actually by the default. But if you wanted to see that on a balance sheet, as an example, as a sub-account, because remember, you are able to do that just like I'm going to show it to you now. So let's assume this is a payroll liability. So instead of credit cards, let's say it's a payroll liability. You can actually go ahead and itemize it and say, okay, I wanted to break down those $3.95. So for example, this is going to be SUDA, which is a state unemployment tax. This is going to be FUTA, federal unemployment tax. And this is going to be Social Security employer and Social Security, Social Security employer and Medicare employer, because remember, that's called, employer match. And something actually what is irrelevant to employee, it's basically listed on your profit and loss. And that's considered, in accounting world, is considered a trust fund, which means that's not your money. That's the money of your employees that you have withheld in their behalf to surrender to the government for their own benefit. And that's why basically it's a part of the expense, because obviously anything you pay to employees, that is expense. So if you pay them $10 per hour, and for example, you're going to have 62 cents for Social Security, which is 6.2%. You're going to have a Social Security, and you're going to have 1.45 for a Medicare. Again, it will be shown on your income statement as in $10. You won't break it down. But in here, it will show you actually expenses that they're relevant, actually to the liabilities that you're going to basically pay, if that makes sense. And I'm going to actually go ahead and show you actually that couple more features, as far as the reports, because we're pretty much actually at 10:26. I know this session is until 11, but I would like to cover, cover actually something relevant to your tax liabilities, on a certain deadlines you need to follow. I just think that will be a little bit more advantageous, instead of just talking about a QuickBooks itself, if you do agree. Otherwise, I can continue talking about a QuickBooks. So on the reports, just like you have, basically reports within a QuickBooks desktop, if you just scroll down, it's pretty much going to give you everything you need to know relevant actually to if you want to run, vendor contact list, which would be the same as in desktop. If you want to actually get 1099 transaction detail report, which is relevant for those of you that have to issue 1099 for your contractors if you were subbing actually any of the work. Then on a financial side, you can get actually customer list and deposit detail relevant to anything else that you do. But at the same time, those are your standard reports. Then you do have a feature to create yourself a custom report. So as an example, you can run a report the way you like it. And then you can save it actually as a custom report. And then you can save the customization as an example. So you can actually say, whatever you want it. And then you can say, I'm going to run that report. And then I'm going to go ahead and save the report. So every time I'm going to name it, I run, for example, weekly reports as an example, or whatever you wanted to basically call it. And then particularly that report actually gonna go to the custom reports. So if you do wanted to see, like how do you do every week or every particular period that you really care, every 2 weeks or whatnot, you can generate all the reports of your choice. And then yet you can actually, when you save it, they will be accessible on a custom report. Now, at the same time, there are some management reports, okay? And you can actually run it for the particular period, and there's some basics in here. You can also download, different type of reports that some of the QuickBooks users actually use because they would make them available. So you can use actually some of their reports as well. But at the same time, pretty much the report section actually is really self-explanatory. You don't have to really go so much in it because everything is so descriptive in regards to what you're looking for. Now I'm going to actually go ahead and explain to you, on accountant side, on the left side, as far as the links that you have listed in here. Pretty much, I will explain every one of those, which is pretty much, very similar to the gear former setting bar that we have in here and the tools that you have it actually right in here. So you can actually pretty much, many of those functionalities you can access actually to your left as well. So if you don't have any questions, I'm going to go actually briefly over this, and then I'm going to actually start with the chapter relevant to the filing the taxes and the tax liabilities and the things that you may need to know as far as the certain deadlines, when to file certain reports, and explain to you the liabilities if you don't do so. So right in here, as far as what we have, as far as the pretty much as far as the overview, this is going to actually pretty much show you the business performance if you have set up, which hasn't been set up, but you can actually create yourself like a dashboard, like it's actually pretty much in here. It's going to tell you, okay, you got so much in invoices, so much of expenses, what's going on in the bank, and you can actually run. You can run actually quickly and say, what is my income in this year as an example, and it's going to tell you here it is, and then what's your sales comparing to last 12 months if you did have a sales, and then of course everything relevant to the expenses. So you can actually create, you can just refer this to this particular screen because it's very much helpful to give you kind of snapshot of everything that is going on before you go actually start running 27 reports. It's going to show you the balances in the bank under the circumstances that those balances are correct. On the banking side, pretty much it's going to show you the screen that we were accessing to the dashboard. If you remember, I would click actually on the bank accounts and it would take me automatically to the banking side. So that's something that we have gone over. You can create memorized rules for the certain transactions. So in example, since we all pretty much more or less are familiar with the national brands of Shell, or Wawa, or even local brand such as a Gate Petroleum, we can say every time something that comes in as in Gate Petroleum, make sure that you actually save it as condition. You're going to save it actually as an auto expense. So every time you would download the transaction, it would likely get saved and automatically recognized and automatically added to your to your financial statement of transactions. Related actually to expenses, there's two parts of this. Expenses actually are relevant, to generate expense as far as a new transaction if you do so. And then also you can run expense, entering expense, which is pretty much getting actually, just a second, let me try to open this up. Oh, here we go. So you can actually go ahead and say, if you wanted to set up the bill, just like we did in a desktop, okay? I'm sorry, if you want to set up the transaction of expense, just like we did in a desktop, because you can actually select the payee. As an example, it could be your counsel. You're going to say you're paying that from which bank account, and you're going to say that you paid it with a check, which technically you're going to be adding it immediately if you're doing this manually. But many of those transactions, if you did swipe your credit card, they're all going to come as you actually download the transactions. And of course, you do have a feature in here that you can attach. You can attach actually the invoice. The difference is it's not like it was before, that you would be able to scan immediately to the transaction. You have to select saved documents on your desktop, or you can drag it and drop it, but you cannot really scan it actually directly into. That's kind of a little bit downfall. I don't know why is it that way, but that, in my mind, that's a little bit downfall because it creates an extra step comparing to the desktop. On top of that, in here, you're going to create your and control actually edits of every of your vendors. So as an example, you could have actually import the vendors if you have them in Excel, or you can actually create a new vendor. So it's pretty much, it's about a demographics, okay? The only thing that I want you to know about a vendor is that you must select 1099 screen if the vendor is indeed your contractor. And you can actually create memorized transaction and call them a contractor. So as you fill out everything at the end of the year, you're going to be able actually to prepare 1099. So obviously, as you reconcile them, you'll be able to prepare 1099s and send them to your respectful contractors. Now, in regards to the invoices, when I open up actually this invoice screen, it's not something that is used in this module because we don't have our products and services set up. We have to have a product and services before we can create an invoice. But again, it's going to be that you can actually set up your customer list just the way. The screen actually looks pretty much the same as in vendor. It's just that you need to pay attention. It says a customer in here. And then in order for you to start using the invoicing feature, you have to itemize your services, which we obviously never did, which is technically, you're going to say that you provide, additions. So you provide, installation of the floor and whatnot. And then at the same time, all your invoices actually in here will be listed, every single invoice with a history of everything that you do. Since I don't have a payroll feature, this would be relevant. I don't have a module. It just basically got a kind of clear screen here. This is going to be relevant to employees and contractors. The good thing that you can do with the QuickBooks, they're contracted and partnered with the AP Intego. So as an example, for those of you that needs the workman comp, insurance, many insurance agents, they really don't want to take a business of workman comp insurance. Again, I'm really speculating why is that. But at the same time, the easiest way for you to get a workman comp insurance is basically, you can just contact AP Intego that is a partner with the QuickBooks Intuit, and they do cover actually many of the industries if you do need insurance. In fact, actually, even our organization uses AP Intego for our workman comp insurance needs. Of course, we're in non-construction, so it's kind of easier. But for those of you that are in construction, keep in mind, if you're trying to get insurance, obviously they do expect you not to have so many workmen, not to have so many subcontractors, and to have all of your guys to be on the payroll, which is going to cost, which will be calculated actually based on a percentage that is established by state of Florida, because they are the one regulating actually the workman comp in the state of Florida. Reports actually something that we have discussed. Taxes part actually would be really part that your accountant may gonna use if you try to integrate, with tax preparation software. I personally have never used, maybe once or twice in the past 10 years that I've used the feature, because this feature can be used only if all of the chart of accounts are properly set. And many times actually they may not be properly set. They might be set but not properly actually mapped what tax line actually to reflect. That's the one I'm taking it back. So the chart of accounts actually is set properly, meaning gate is irrelevant to the auto, but tax line related to that auto as an expense on a chart of accounts of an income statement may not be properly mapped to reflect actually the tax line as you're trying to integrate this with the tax software. So many accountants don't even use that because of a chance that something actually gonna be actually kind of wrong. The mileage feature is something that I personally did not use, and I actually recommend to everyone to use Mileage IQ. This is pretty much actually good that if you use your personal vehicle, so you can, at the end of the year, you can itemize, you can itemize actually that as an expense. Now remember, I'm gonna, with this particular module of a mileage, I'm gonna go ahead and shift this conversation to tax liabilities. Now, just remember, I had opportunity to assist actually quite few clients of ours in an audit. Some of you actually would ask me, well, how many of your clients actually did end up in audit? Not too many, to be honest with you. I can count actually on one hand. I don't know why, but I can count on one hand how many of our own clients that we did the bookkeeping and accounting ended up in audit. And even on one hand that I can count them, every one of them actually went without any changes when they went to it. But we would be assisting actually clients relevant actually to audit with the Internal Revenue Service, and we will help them actually to get prepared for that stage. And many of self-employed clients that we have come across, they would have an issue over the mileage, and they would say, well, I did 20,000 miles. Well, Internal Revenue Service actually expects from you to provide a proof of a logbook. And the logbook actually is consisted of the date of using the vehicle, your beginning odometer reading, ending odometer reading, starting location, ending location, and a purpose of you driving for the business if this was actually business related. So IRS actually, in my experience, is not very much happy to say, yeah, sure, you drove 20,000 because you're a real estate agent. No, they wanted to see actually this in a following format so they can basically go ahead and process it. Otherwise, they can disallow it. If the agent decides to disallow that, they can actually certainly do that. But rather than you risking with it, you install actually yourself an app such as a Mileage IQ, and it's going to trace everything that I have just mentioned. Now, also, some of you might be self-employed, single member LLC. You guys going to come in and say, well, I heard about this big deal. We work from our home. So therefore, especially now during the COVID time, we work from our home, and some of us actually, we also still work for our employers. So are we going to be able to expense the usage of home? So I just want to explain to you that prior to the COVID, and I'm sure actually going to be like that for 2020 as well, for all of you actually that they're self-employed, if you do claim your residence, this is the way actually how it goes. So you don't expect a miracle from your accountant out there. So let's say you live in a 1,000 square feet home, okay? And you use actually a room that is a 10 by 10 for your business, okay? And now that means actually that you're using 100 square feet, which in comparison going to be 10% of your home, okay? So now, in order for you to qualify to deduct the money for a usage of your home, let's say that you pay $10,000 in interest, okay, for your mortgage. And let's say that your utility bills actually are also $5,000 with the internet, and so on and so forth. So now your accountant likely, or at least that's how we do it in here, we're gonna allocate 10% of that bill. We're gonna allocate and say, this is actually what was really on a side of your business, what was the business usage, which means it was a $1,500. And $1,500 actually gonna save you money on a self-employment tax because that's going to be deduction, and it's going to save you money on your personal income tax bracket. So let's say that your self-employment taxes are about 16%, they're 15 and some change. So let's say it's a 16%. And let's say your personal income tax bracket is a 14%. All of that is basically 30%. So now how much money did you save? You save $450 on a $1,500 of expense. Now, this is why I'm going to say that this is a little bit tricky. You do have a right, according to the tax law, you do have a right to report that. But many of self-employed individuals, they get audited if those amounts actually are kind of a little bit higher than you would expect. So what usually happens is, they're going to come in and they're going to say, all right, now we're going to actually go ahead and start the audit. And they're going to say, we would like to see the proof of your mileage. We would like to start seeing the proof of your expenses relevant to using your personal home for a business, and a couple other expense items that they're going to see out there. So now, on top of that, they're going to also interview you, and they're going to say, can you please explain to us how is it that you use your home, and how is it that you're using the part of your home for your business? And you're going to say, well, I'm in a room 10 by 10, we have, created the shelving and all that. And they're going to say, nice. And let me ask you something. Do you by any chance actually have a family members to kind of get together around the holidays to that room? And you're going to say, yes, I do. Do you actually ever check actually your Facebook, and do you ever check actually any personal emails? So do you conduct any personal business from that room? And they're going to say, well, of course, it's my house, right? So now as you have answered those questions, they can disallow the usage of the home of a $1,500, which is a $450 of a saving, because you went in and you use it for the purpose that is not exclusively for what was described. Now, your response back gonna be, well, how come my accountant actually, when I go to his office, I always see his Facebook open on his screen, and they're gonna say, well, that is a business space. Your accountant does not work from the garage. He works from the business. So therefore, yes, he might be owner of the business and he's allowed to, but you're not allowed to use, that particular designated space in your house, for a personal use, in order actually for this to fly. So in conclusion, I'm trying to say that usage of homes sometimes could really compromise you and cause you an audit, trying to save a buck, but create you actually more problem, as well as in mileage. And those are the two common factors because of which you would get into audit if they are pretty much overstated. Now, for those of you that they are employees and they are working actually for a different businesses, simultaneously actually working from home, trying to run your own business, as you probably have heard, or as you know, or as you've been told, or whatnot, since 2018, unfortunately, we're not allowed to itemize, business expenses relevant to our employer. We are not allowed to itemize those. This is especially affecting traveling nurses, healthcare workers that they basically work for a healthcare agency. They used to be able actually to provide a mileage book, and they would say, well, I drove 25,000 miles and now I'm going to be itemizing that. That's not the case anymore. Many of you actually work in a sales, and you would use your car or you would use your phone and you would be itemizing that. You cannot do that since 2018 up to the current. I'm not sure how this is going to be in a later time, if the tax code actually going to get changed in that regards. But I want you just to be aware of that that's not the choice that you can do anymore. Now, besides the self-employed, individuals, single member LLCs, I'm going to move to the partnership, C Corp and S Corp. But before I do so, to explain to you tax liabilities, and some of the hints that you need to keep in mind, did you have any other questions, related to self-employed?
Looks good.
Perfect. So for those of you actually that have a multi-member LLC, you guys are considered by default a partnership, unless you elect to be treated as something different for the tax reasons. Remember, you're going to be LLC as far as a business entity, obviously regulated by the state of Florida, right? But for the tax purposes, you are treated as a multi-member. You're treated by the default as a partnership because you have more than one member. Or you can elect actually to be treated as a C Corp or S Corp, whichever basically you prefer for the tax advantages. And I will explain to you tax advantages one versus another. Partnership organization as far as filing the taxes as a partnership is very beneficial, especially for those of you that they try to raise the capital and they're trying to limit liabilities of investors. So let's say that you have a family and friends, that they believe and support your idea, right? But yet actually they don't want to have a personal liability to the business. They just want to be silent investor. So you can establish actually, you can actually treat them on an income tax return as a passive member. Passive member actually means that it's basically the member or part owner of the business in respectful number of shares or percentage actually that they owe of your business is basically a person who does not bring day-to-day decision, right? And their investment to your business the losses of your business, if any, would be contingent, or a profit would be contingent to the investment and number of shares that they owe in your business. So as an example given, let's say, Jennifer Smith owns the business, with her friend Mark as an example, but they decide to bring actually 5 more people to chip to their idea. So they take $100 from each person, which basically, gives to each person gives 10% of the business. So now each of those, silent investors basically going to be sharing the profit, and they would be a due of any profit sharing that you're going to have if at the end of the year, as an example, your business would have actually created $1,000 in a profit. So therefore, their basis, instead of being 100 this time, would increase for 100. You may or may not distribute the money to them, but the basis in a business actually now going to increase to $200, which at the same time, you will have opportunity to say if you're going to distribute any funds to them or not, but the basis are $200. So 2 years from now, if every year they would make a $200, they would have actually pretty much $400 or $600. And after that, they're going to say, okay, we would like to sell our shares. So how much are you going to sell it for? They're going to say, well, I would like to sell it actually really for $1,000. Now, remember, they did not take no money throughout the time. And their initial investment of $100 plus actually money, the profit throughout the years have increased to $600. So likely their capital gain at that point actually going to be actually the difference, which is between $1,000 and $600, which is $400, because their bases were $600 and they never took a penny from the business. So just, and again, to create more detailed scenarios, you can actually contact your accountant, you can call us and we can kind of help you out with it. Now, the difference between active and passive participant in a business is that an active participant in a partnership scenario is a subject of 2 types of taxation, which is a self-employment tax and income tax, which means, if you remember from self-employed scenario that I was saying 30%, let's assume that's going to be again the case. It's going to be 16% to round it up, 16% on self-employed, and then whatever the personal bracket is of an active participant. Let's say it's a 14%. Now, 5 other investors that they're passive participants, they will not be subject of self-employment taxes. They will be subject actually of pass-through income to pay the taxes on their personal return for the income actually that is allocated to their K1, and they will pay the income tax bracket, whatever actually they would be in, but they will pay it for amount that is shown and distributed to the K1. Now I'm going to move actually to the C Corp and S Corp because we got about 8 more minutes, so I don't take a whole lot of your time. But did you have any questions related to the partnership?
Doesn't seem to be any.
Perfect, perfect. So I'm going to actually start with the S Corp because S Corp is kind of very common. Many of you may have a confusion because I have experienced that as in confusion from many of my clients. They will come in and say, well, I got an S Corp, so therefore, that's my business and my business have profited, an example, $100,000. Now, many of you probably does not know that an S Corp requires you to have a payroll, requires you to have a payroll for yourself. And a payroll doesn't mean that you need to pay yourself $6,000 or $60,000. Let's assume that your business made $100,000 profit. And let's assume that you are basically, electrician, licensed electrician. So what the IRS expects you to do is, when you have a structure of the S Corp, IRS actually expects you to run the payroll for the officer of the business who is an actively participant of the business, which at this point actually is a licensed contractor. And IRS actually wants you to pay yourself a reasonable pay as the money that you would have made with your experience and your position if you have worked for somebody else. So let's say that licensed contractor, licensed electrician doesn't always have to have their own business. As a licensed electrician, you could have worked for another business. And let's say that they're licensed electrician likely because you can go out there and check the salaries, salaries actually of the certain positions in certain professions. But let's say that the licensed electrician would make $50,000. Now, your accountant actually has suggested to you that you can just run the payroll for $12,000, not to worry about anything else. That is wrong, because if you ever get in an audit, they're going to say, first of all, we are creating an audit for those reasons, which one of them actually could be such a low payroll. They're going to ask you, how many hours do you work on a regular week for your business? What is your qualification and what is exactly job description? And when they determine that from you, they're going to say, so how come you were full-time employed as a licensed electrician, you made $12,000? So how come actually that you just made 12? Why didn't pay yourself more? Because your business was profiting 100,000. And you're going to say, well, my accountant really advised me to do so. They're going to say, well, that's a mistake. But don't worry about it. We understand. We believe you. But now what's going to happen is you're going to have to pay a difference in a payroll taxes for $38,000 plus interest plus penalty. And of course, everything else that they possibly can disallow from that federal income tax return that you have in front of them. So keep in mind, if you're an S Corp, you have to have, as long as your business is creating a profit, and as long as you materially participate in running this business, you have to be on a payroll. If this is some sort of investment for you and there are other people running the business for you and you not materially participate in it, then obviously you do not have to. But many of you likely are participating in running a business and making a decision day to day. So therefore, if there's a profit, you have to pay yourself reasonably, and that is a subject of payroll taxes, where the rest of the money will be passed through income, and you will pay only taxes that they will be applicable to your tax bracket. And lastly, I want to finish with the C Corp because there's 4 more minutes. I'm not trying to rush myself, but I just wanted to respect your time. If you cannot stay anywhere past 11 o'clock. The point actually with the C Corp is that the C Corp basically does not affect 1120 when you file it, which is a tax form, which is a C corporation tax return, does not affect your personal return. So in example, you can have $100,000 actually of a profit in a C Corp. You're not required to have any sort of the payroll on a C Corp. But here's the catch. C Corp actually pays their own taxes. So they're going to pay, let's say, 20% to a federal government, and let's say they're going to pay 10% to the state of Florida in taxes. So now, you know, on a cash flow, you're going to have $70,000 sitting on your account. If you decide to take the penny of that money, a penny, as a distribution, that will be considered a dividend distribution if you did not work for it. If you did work for it, you needed to have W-2 with that business, or you needed to have actually 1099 to be issued to you if you did work for the money. But if you didn't, then obviously any money that is pulled from the C Corp will be considered as a dividends paid to you, and therefore you have to report it on your personal income tax. Now we got 3 minutes to the end, and this was actually just my short summary, you know, over tax liabilities in respect actually to the business entity and a tax choice that you're going to make with your businesses. If you all have any questions, you can ask me. If anything else pops up, you can reach me at 904-425-1238, or you can simply actually just go to you can go actually and book, you can book actually appointment with us going to our website, which is ourbookkeepers.com. I mean, it's trying to get open. I don't know why it's not opening for whatever reason. Any other questions? So here it is. That's our website. I don't know why is it actually kind of acting this way. So here we go. So you can actually come over here, you know, and schedule yourself a free consultation, because we do offer actually a free consultation. If you need the training, we offer the training, you know, or if you need your taxes actually to get prepared, or you requiring actually some sort of bookkeeping services and whatnot, or you want to actually do one-on-one training in a QuickBooks. So you can actually do that all from our website. If you wanted to basically Google us, you can just go to Google and basically find out, you know, who we are and what is it that we do, and people actually that have come to visit us before. And we're pretty much located over here right off Beach and Hodges within Walmart Plaza, next to Salsa Mexican restaurant, and basically T-Mobile that is within the same, that is within the same plaza, just so you know.
Awesome. Thank you so much, Zoran. Thank you all to our participants for being here. I put the email address, website, and phone number in the chat. We will also have a recording of this session, so that'll be available to you as well in the online classroom. So I'll share with you a follow-up email that'll have that link and information. If you have any questions, though, feel free to reach out to myself. Feel free to reach out to Zoran directly, and we look forward to serving you in the future. To everybody as well, have a happy holiday season, be safe, and let us know what we can do for you.
All right, guys, have a great day.
Thank you.